Tamasek says no to Chip Goodyear, the state-run sovereign wealth investment fund, abandoning appointing him as CEO because of what it calls differences as it relates to strategic issues. What led to it all? Earlier, I talked to David Cohen of Action Economics in Singapore if it was because of a clash of personalities.
I suspect it was just they had some policy differences, and he was unprepared to take whatever coaching they were intent on giving him, and you know, at the end of the day, it shouldn't make much difference. They're still going to continue smooth operation. They have an experienced staff in place, and they're still facing the same issues that any manager of $100 billion portfolio faces in these interesting times.
You know, they've taken a bath at Tamasek in a lot of things, like some of their bank investments, B of A, Bank of America, Barclays. Chip comes with a rich experience in materials management and commodities. You know, is it Tamasek's loss, do you think? Is it Singapore's loss, not having a candidate of this stature with that kind of a pedigree?
Yeah, it's probably a loss for both of them. I mean, you know, jobs like this, managing a $100 billion war chest, don't come along every day. And as you say, he had considerable experience. They took their own lumps last year during the financial crisis. But again, that wasn't really out of line with most portfolio managers. I mean, even Warren Buffett took his lumps last year. But yes, it did seem that he brought some useful experience to the table that would have benefited Tamasek. That's why I say they probably both lost, you know, for this, and you know, maybe just chalk it up to some good theater here.
And that was David Cohen of Action Economics with his view on Tamasek's situation. Let's throw it to Jeff here from JPM AM. Any thoughts to add to the, you know, they're not going to tell us everything about what those strategic differences were. How,
it would be very unusual for Tamasek to tell you everything, I think. Yeah. And I wouldn't like to comment on it, really, except that, you know, I think a lot of investors are maybe reviewing their fund managers.
Yeah. You know, remember a while back we talked about the heft of the SWFs, the sovereign wealth funds. So China, when did they establish theirs? Last year, the year before? It's a pretty young. It's a new baby.
Been going about 2 years now.
Yeah, it's a pretty new baby. They kicked off with a $200 billion check cut from the federal federal government there. Nobody seems to be talking about sovereign wealth funds anymore. Have they been overtaken by retail liquidity? About you know, about flows and ebbs and tides of cash from elsewhere? We haven't even used that term, SWF, in a long time.
Well, I think there was some concern with sovereign wealth funds throw their weight about, but really they're just one player, and I think when markets are changing, there are huge flows going in and out of the regions. I think the sovereign wealth funds, they're not dominant by any means, and they tend to be more long-term investors. I think the IMF looked at them. I think there was some set of rules that were suggested that they should play by, and now the issue seems to have, as you say, it's no longer in the spotlight.
Mm-hmm. Let's get back to the crux of our issue today. You are positive on many things in terms of what's going on in the world. You know, stimulus policy, a lot of the initiatives. What are some of the negatives? What are the biggest sort of swing factors that still kind of linger in your mind as a dark shadow over your whole, you know, over the entire vocabulary that we work with?
Right. Well, I think we are believing that the medium-term outlook is going to be pretty challenging. It could well be a W-shaped recovery. In other words, an inventory rebound in the second half of this year, going into 2010, and then maybe growth fading thereafter. So it could be several years of really weak growth, sub-trend growth in the US and Europe. We still have a lot of worries about the European banking system, which seems to have lagged the US in terms of recapitalizing, in terms of getting its problems out into the open. And we think maybe markets short-term have got ahead of themselves, because a lot of these green shoots have been related to soft data, to business and consumer confidence surveys, not really to the hard data.
So you subscribe to the theory that this might be a head fake, then, what we're seeing now? I mean, the Hang Seng's at, what, 20,000 or thereabouts last time I checked. It's rebounded like 70% since the end of March. It's nuts, isn't it, in some ways? I mean, we'll take it, but it's nuts.
We'll take it, yes. That's one of the risks for Asia, is that there could be an asset bubble, because so many people now believe in the China story, the India growth story, and there's so much money coming into what is still a relatively small market. So I think that is a risk that we could see stock markets bid up and then a bit of a hangover afterwards. But then it's warranted in the sense that Asia's fundamentals are relatively far superior to those of the US or Europe, so we're quite happy with that.
Yeah.
So
but the problem is too many people are latching onto the same set of principles there, or the same story. I mean, when you get Americans, in any town or Middletown, USA, saying, I like the China story, I don't like what's going on at my Western Community Bank, then you got money, all chasing after the same small pot. Or the small, basically the same prize.
That's why emerging markets are never really defensive investments. You do get this hot money which tends to flood in, and then you get what the IMF calls a sudden stop, and it all flows out. But this time I think we are seeing a better chance of incremental decoupling, both in economics and in market terms. I mean, the market decoupling between MSCI Asia and the S&P since October is simply phenomenal.
Okay, we're going to take that. We're going to talk about the overweights, the relative overweights, later on in the program. With Jeff, overweight OW on China, OW on India, relatively sanguine on a relative peer-to-peer basis in other markets. We'll talk this through. A lot of you writing in. We're going to take all this up in the next section of the show as AC continues.